Hi, welcome. My name is Sandy. I'm with eXp Realty. I'm here with Ron Kuhn with Summit Funding, and we're going to talk about FHA, VA, and conventional loans. Hi, Ron. How are you?
Hi, Sandy. I'm doing great.
I wanted to ask you, for our audience, what's the difference in qualification standards for FHA, conventional, and VA?
Boy, that's a mouthful, but
Yes.
I'll try my best. When you look at the three different agencies, and they are three completely different agencies that purchases mortgages in today's world, the probably the easiest loan to qualify for of the bunch is going to be FHA financing, both from a debt ratio standpoint as well as credit standards. VA would come next as maybe the second most difficult to qualify for, but by far conventional financing has a much higher requirement for both credit scores and a lower level of debt ratios that they'll allow. But all three programs have their place. You know, with VA financing for the veterans, it's marvelous. It's zero down payment. You can have a seller cover all of your closing costs on the transaction and literally move in for not a penny out of your pocket if you can negotiate that home well enough. FHA financing is the next lowest down payment at 3.5% of the sales price, but still you can negotiate with the sellers. So say you're talking about a $200,000 home. You know, your borrower might need $7,000 of their own money, or gift funds from family members, or retirement accounts they can borrow against. You know, the barrier of entry is still pretty low. Going conventional financing, though, to get into the mainstream interest rates, the better rates, minimum down payments are 5%, and in general, your credit scores have to be much stronger than with FHA and VA. And if they're not, if you still have low scores, even though you might have larger down payments, sometimes it's more advantageous to look back to FHA and VA financing to do your financing with, because the cost of the interest rate, the cost of the mortgage insurance will yield you a better monthly payment. So you can see when a borrower comes in, we don't make the assumption that they're going to fit in one bucket or the other. We really look for what's going to produce the best monthly payment for them long term, and that's generally the direction we go with the loan application.
Oh, wow, fantastic. If you have any questions, I don't have any more questions for you. I think you covered that pretty well.
Perfect.
If there's any questions that Ron can answer in financing or FHA, VA, or conventional, you can contact him at his number below. Also, you can contact me, Sandy Adkins, at eXp Realty for your realty needs. If you have any questions, please feel free to reach out to us. And thank you very much for tuning in and talking with Ron and I.
Thank you.